India may remove limits on gold ETFs in pension investments. This is big news. This means India could supercharge gold investments demand globally. If you stay to the end of this video, I'll explain why this is a big deal for gold prices moving forward. Under India's current financial framework, gold, real estate, and infrastructure funds are all currently treated as alternative assets. This means in practice that they're only allowed to represent 5% of a pension fund's total investments. To give context here, one report noted the total value of all assets held in the country's pension funds have more than tripled since the pandemic. Tripled. This is driven by India's economic growth and increasing participation in the financial system. Keep in mind, India has 1.4 billion people, and they are one of the biggest gold-consuming countries in the entire world. The fact India is thinking of reducing limits on gold ETFs means that pension funds could pour a lot of money into gold-backed investments. This is huge. And this adds up with what I was saying in one of my other videos. Gold ETFs are soaring worldwide. And to top this off, India's insurance regulator is also proposing to lift investment caps. This means insurers are allowed to include gold ETFs into something called a unit-linked insurance plan. It's not that relevant for the video what that is, but essentially it means that there's going to be more demand for gold ETFs. They're currently capped at around 3 to 5%. So once this is uncapped, that's going to be even more demand for gold ETFs. Why does this matter? Why can it blow up gold prices? Well, as you all know, India is a massive country. It is one of the largest gold holding nations, as well as one of the largest gold consuming nations, not just for jewelry, but as a cultural and financial safeguard. In 2024, gold ETF inflows in India hit record levels, rising by 112 billion rupees, which added 15 tons to holdings overall. And more importantly, support wasn't just retail. Corporates also jumped in. So if pension funds and insurers pile into gold ETFs, we're talking institutional level buying. That is huge. And this could further push gold demand even higher. So it's all coming together. The demand for gold worldwide is only increasing. This is not financial advice, but I do believe gold is very, very long-term bullish. So picture this, domestic demand in India skyrockets. ETF inflows get a massive boost. India's move is just part of a global wave. Central banks and ETFs are shaping strong gold demand, making 2025 one of the biggest years yet.